All right, welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is the podcast that will make you a better investor and a better leader. I'm excited to talk to our next guest because he usually comes on our live shows. He's been doing this basically since we launched more than 6 years ago, at least the TV operation that is Yahoo Finance. That is ZoomInfo founder and CEO Henry Schuck. Henry, good to see you. I'm glad to have you on the podcast. Now I can ask you what you ate for dinner last night, how you prepare for an earnings call. I mean, this is all good stuff, dude.
I'm glad to be here, Brian. A much more casual environment than 4 minutes as the bell rings.
Tell me about your profit margin. Next. No, really. Actually, it's funny. I mentioned that. How do you prepare for an earnings call? Of course, you just reported earnings. I listened to you at that earnings call. I mean, you have an earnings call ritual. Like, how do you get through this stuff?
I have an earnings call ritual. Usually, we do our board meetings the week before an earnings call. And the board, first of all, I think of earnings calls as like every 3 months you have to defend your thesis.
Yeah.
You're like a PhD candidate who has to go in every 3 months and defend the thesis that you put out 3 months before and give everybody an update about whether you were wrong, were your hypotheses correct, what metrics can you show that say you're right about your theory. And so I have a board meeting the week before, and by the end of the board meeting, I know the business backwards and forwards. I know what's happening in product and sales and finance. I know all the moving pieces of the business. And then we're basically taking that and the narrative from that and putting it into an earnings call. And then the next week there's the call, then there are callbacks with analysts right after the call, and then the next day there are callbacks with investors. But I have a really close feel to the business by the time I've come out of those two things. And so everything gets a little bit easier. The board meeting makes the earnings calls easier. The earnings call prep makes the analyst call easier. The analyst call work makes the investor calls easier.
Does it always feel like you're every day you're just leading up to the earnings call? It's like you're just living on these 3 month cycles, right?
Yes, you are kind of living on a 3 month cycle. You're trying to think long term, and if you're doing it right, you're setting up your guidance to give you the ability and to invest in the long term in the business without having a gun to your head every 3 months. And I think we've gotten a lot better at that at ZoomInfo, is being really smart about the way we set guidance to give ourselves the ability to not only execute on the in-quarter stuff, but give ourselves the ability to invest in the long-term durability of the business. Like right now, we're trying to invest in the upmarket portion of our business, which is growing and steady and has really good growth opportunity in the future. While the down market segment of the business, which used to be a really big part of the growth story, we're trying to move further away from and invest resources out of down market into up market. If you don't give yourself any room from a guidance perspective with the street, you just have no ability to invest in up market because you're just on a hamster wheel constantly.
Yeah, is it hard, Henry, to, as a founder, to just stay out of the weeds and just let the team set the guidance, establish the transcript for the earnings call? I mean, you just tweak it, of course, here and there, but I mean, you founded this company they didn't even exist before you.
It's actually the easiest thing to do, to stay out of it. It's also the worst thing to do, to stay out of it.
Yeah.
You can stay out of it, and then you just show up and you read the stuff and you don't have your hand on the control and you don't know, was this guidance close? Was it far away? Did we, what sort of risk is there in the numbers? I can't really operate the business very well if I'm not close to how we're doing earnings, how we're talking about the company, how we're setting the guidance in a way that we can beat and raise. I did, by the way, Brian, there were 2 years there where I just trusted it all to finance and my go-to-market head, and I showed up and kind of was over the top of it. Now I'm deep in the bowels of how it gets created. Mm-hmm. I know what's happening. I have a much stronger feel for it. And so then I'm really confident about what we're saying we're going to do because I've been involved in the preparation of it. But I think everywhere in the business, by the way, not just in the way that earnings and guidance get put together, it's really easy to just convince yourself I hired a great marketing person, so now I don't have to worry about marketing anymore. And I hired a great salesperson, so now I don't have to worry about sales anymore. That is not how business actually works. And like, I view myself as a partner with my head of marketing, as a partner with my head of sales, as somebody who wants to solve problems with them and make sure we're constantly aligned and poke at things that I don't think are working and then help devise solutions to those things. And so like, I take a lot more pride today in being much more closely involved in our business than before, where I thought like, oh no, every big company CEO has to like step off and give full authority and abdicate everything to everybody else. Like, I don't buy that.
It's hard to delegate, man. It's brutal because you could, in a lot of cases, you've done these jobs by yourself and you've done them well.
Yeah, look, for 18 years, I have woken up every single day, and the majority of my thoughts, fortunately or unfortunately for my friends and my family and myself, have been about Zoom info. I obsess about everything.
I know the
about
feeling,
Zoom.
except I don't wake up thinking about you and Zoom info, but I get it. I understand where you come from. And it was interesting. I was thinking back ahead of this to the first time I talked to you, maybe early on in the pandemic. I was at my ex-girlfriend's kitchen table with like a pound of frozen meat next to it. I'm like, what the hell is going on? Like, I'm talking to Henry. This is weird stuff. But nonetheless, like, the business was different. What I heard, and I should mention, as we tape this episode, stock's up 21% after some good guidance, good quarter. But there's a lot of changes going on in the business. I was on that earnings call, Henry, that you just did, and there are new terms that I haven't recognized. You're talking about chatbots now. You're talking about AI. Like, what are some of the biggest changes in the business as people look forward to the next 12 to 18 months from the company?
Yeah, great question, Brian. Thanks for noticing. I think like the big thing that happened to us really over the last 2 years, and it's happened to most companies in the front office application stack, is that well, it's gonna sound like a cliche, but we leaned way into AI. I'll tell you why that's different for us, is that 2 years ago, our business started decelerating. And it started decelerating for a number of reasons. Macro, our main vertical tech came under tremendous pressure. We had done some acquisitions that we hadn't fully integrated into the product, but things started decelerating. And we came to this moment where we were like, who are we going to be in the future? And we're going to need to reinvent ourselves. And how are we going to reinvent ourselves? And kind of exactly at that time, this AI revolution, ChatGPT, showed up at our doorstep, and we just said, okay, we're going to reinvent ourselves around AI. And a lot of the companies in our space, they weren't having that existential crisis at the same time. They're having it now. But 2 years ago, when we had it, we were able to say, okay, forget about the application stack, forget about all the stuff that we used to be in the past. We're going to build a future on AI, and we're going to lead the way on go-to-market in AI, and we're going to kind of abandon the things that we were trying to build and the vision that we used to have for where Zoom Info is going to go. We're going to swap that with the vision of driving AI and go-to-market by giving sellers and account managers and customer success managers the data and the AI agents that they need to start automating the most arduous parts of their jobs. And we're going to innovate there. We're going to lead there. And so today we have the leading AI for go-to-market solution. We've brought in AI and platform leaders across our product and engineering organizations. We've doubled down in data. One thing that we learned over the last couple of years is if the data going into your AI agent is not great, then the output is also not going to be great. And for go-to-market professionals, the data that they need is B2B data about companies, data about individuals who work at those companies. That needs to be up to date and accurate. And then you need to surround it with signals around what's happening at those companies. That needs to feed the AI. And so in go-to-market, it's really unique that the data asset you need to build a successful AI agent doesn't organically live inside of your systems. It needs to come from a third party. And we are quickly becoming the de facto provider for AI agents and data in the enterprise. And we're going to just continue to lean in there.
Are you able to charge people higher prices? I think back to the Mark Benioff model over at Salesforce, where he's got these agents, he's charging a couple bucks per conversation. I'm like, Mark, that's big money, dude. That's going to add up in a big way.
Yes, we are. So what we're doing today is we're monetizing. We have the AI product that we have is called Copilot. It's an AI version of our platform, and we are monetizing the migration of our customer base off of the legacy non-AI version of our platform onto the AI version of our platform. Today, we're seeing a strong double-digit uplift on user seat prices when we move customers onto our Copilot solution. We have about $150 million of ACV on Copilot. That product was launched in April of 24, so a pretty fast ramp. And then we're going to continue over the next 2 years to migrate the rest of our customer base onto Copilot and monetize that uplift as well.
Message to the street. Here's another software executive telling us that you will make money on AI agents. Like, these things can be monetized. Hang with us, Henry. We're going to go off for a quick break. We're going to be right back on Opening Bid. All right, having a good conversation here with ZoomInfo founder and CEO Henry Schuck. Henry, I think the last time I saw you was at Dreamforce in September. We were at that Mark Benioff dinner on top of Salesforce Tower. And, it sounds like, Mark has gone through like I think a leadership rebirth. And that company has changed so much since they've rolled out AI agents. It sounds like that's what you're going through too. And I bring that up because you just announced like a major stock repurchase program. And I think that surprised a lot of investors. Like, what's your message that you're sending to investors here?
I think a couple things. One, we think that over the last year and today that the stock price is below the intrinsic value that we think it deserves. And as long as it's below that value, we're going to be buyers of the stock. Part of my job is to allocate capital that the business generates. And last year, we generated $1.07 of free cash flow per share. It's a cash flow generative business. And then my job is to take that cash flow and decide, like, what are we going to do with it to give the biggest return to our investors? And today, I think the best stock to be buying is ZoomInfo stock. I think it gives the best return. And so over the last 18 or so months, we've retired about 18% of the company's shares, 17 to 18%. We continue to think that there's a buying opportunity for us to continue to retire shares and drive shareholder value by doing that. And so we announced another $500 million share repurchase program, and we anticipate being aggressive as long as the stock price is dislocated.
It's like you're taking the company private, Henry. I mean, I know you're not going to sit on a podcast as a public company CEO and tell me, hey, yeah, we're taking the company private. But like, I don't know, from the outside looking in, I mean, that's a serious commitment. I mean, that's big money.
Yeah, and look, 2 quarters ago, I personally bought $13 million of the stock. Last quarter, I bought another $5 million of the stock. Like, I believe in the same thing that the company believes in, is that the price of the stock is undervalued. And as long as it is, there's a great return to be made by buying the ZoomInfo stock. And, I tell investors that I really believe in the future of the company. I know that we're hitting an inflection point where the company is going to really start accelerating. You saw that actually this quarter, where our net retention rate ticked up 2 quarters after being flat for 3 quarters. Our 100K customers grew by 58 customers. We had the largest beat that we've put out there in many, many quarters. So we feel really good about the trajectory of the business, and I'm happy to invest behind that, both with my personal capital and the company's free cash.
Your business touches a lot of small businesses, medium-sized businesses. We're at this point now in the market, at least, Henry, where things are starting to look a little shaky. The consumer confidence weakening a bit. People are concerned about tariffs. Any indicators in your business, like leading indicators, that would suggest small businesses, medium-sized businesses, really the fabric of this country, are pulling back a bit?
I haven't seen any pullback, Brian, but I would tell you, like, I haven't seen it improve or get worse over the last couple of quarters. It's been pretty stable. We obviously saw it get worse after interest rates started ticking up. That was a meaningful, obvious shift in sentiment that drove that you could actually see in the SMB segment of our business. But today it's been pretty stable.
Talk to us a little bit about your story. Every time I've talked to you, it's been like 6 minutes. We've asked these questions, and we've talked to you 3 months from now. Next time we have an earnings call. But like, how did you start this company?
Yeah, so in college, I needed a job after my freshman year in college. I had no money and I couldn't afford rent. And I applied everywhere all over the Las Vegas Valley. I went to college at UNLV. I thought I was going to be a hotel manager. I ended up getting a job at this one-man sales intelligence company. And I learned a whole bunch about how you build data assets for salespeople. I left, I went to law school. And after my first year in, I put $25,000 on my credit card. My co-founder put $25,000 on his credit card. And we started what became ZoomInfo. We, for 7 years, took no outside funding, grew the company to just over $25 million of run rate revenue before we took outside funding from private equity. And that was 18 years ago, which is like, it's pretty, I was 23 when
You're like a grizzled tech veteran, Henry.
18 years is a long time. Luckily, it's been a pretty good time.
There was no AI in 2007. There was no AI. Or maybe there was,
no
but just
AI.
not in its current form.
Yeah, they called it something different.
Yeah.
And it was probably a lot of smoke and mirrors back then. And so there is, I think like what you said about Mark Benioff at Salesforce is true. I think AI has given a lot of leaders who've been in the game for a long time a new like leadership rebirth. They see this opportunity to rebirth their companies, to be like at the forefront of innovation. And if you think about like when Mark started his business in 2000, the big shift was from on-prem to the cloud. And a lot of people talk today about like, oh, like, is Salesforce going to be the Siebel of 2000 or these other companies that didn't make the change from on-prem to the cloud? Is that going to happen again? Well, the big change is if you go back and you read, how Mark was talking about the business, even in 06 and 07, there was still a lot of pushback on this concept that people were going to move their software from on-prem to the cloud. People didn't believe it 6 years after Mark started Salesforce, 7 years after Mark started Salesforce. But today, there's a very different sentiment around AI. The leading companies are not like, oh, nobody's going to use AI. The leading companies, Mark's business, is leaned in, all the way on AI and agents. And they are adamant that like, this is the next wave and they will not be passed up the way other companies were passed up in 2000. So it's just a different construct than it was back there. But I think leaders who've been in the game a long time can see like, hey, this is an opportunity to reinvigorate and really innovate the company forward in a really paradigm shifting moment.
Would you recommend entrepreneurs that may be watching this younger today put $25,000 on their credit card and start a business? Because I always hear like, oh, you have to take risks, you have to work really hard, but I mean, you don't scale a business up like you have from 2007 to 2025 simply by working hard. I'm sure there's other tactics you have used besides putting on credit card debt and working your butt off.
Yeah, look, I would recommend that people bet on themselves for sure. I think that if you're fully committed to an idea and it's not just like a fleeting thought, that yes, investing in yourself, investing that $25,000 in yourself and in the business that you believe you can create is a good investment. I think if it's something that you think you're going to do on the weekends or you still have your full-time job and you're distracted and you're not all in on it, then I wouldn't do that. Like, you don't put $5 on your credit card if that's the case. But if you're willing to go all in on something, I think there's value in making a real investment behind it.
In the last 2 minutes or so, Henry, we love to get hot takes from our guests. So my question to you for this is, and I have nothing written down, just living in the moment, blank piece of paper here, having talked to you for a while. What is your end game with ZoomInfo? If we're having this conversation 25 years from now, where is this company and where are you?
Yeah, look, I'll talk about it from a metrics perspective first. I want to get ZoomInfo back to double-digit growth. I want it to be a double-digit growth company with high margins that has a great durable pathway through its future. Um, that's what I'm focused on now. I think when I'm able to do that, I will be really satisfied and proud of the work that I've done at ZoomInfo, not just to get it to scale, but to get it to double-digit, durable, long-term growth. That's my goal today when I think about it as a business. When I think about it as an innovator, I think about I want to make sure that ZoomInfo is consistently leading the way in go-to-market technology. For go-to-market practitioners, sales reps, marketing, account managers, I want them to look at ZoomInfo as the place to go look to see where go-to-market technology is going. And look, as long as I'm able to continue to progress the business forward and I feel like I'm making progress, you'll see me here doing that.
So I will decode that in real time. That is Henry saying he's going to be here for the next 25 years leading ZoomInfo. Henry, good to see you. It's been fun watching your journey, and appreciate you always giving Yahoo Finance time.
Thank you, Brian. I really appreciate you having me on.
All right, look out on X, because I'm going to be tweeting or Xing this at you, whatever the hell they call it. I have no idea. Henry Schuck, good to see you. ZoomInfo founder and CEO. And that's it for the latest opening bid. Like I always say, hit us with those hearts on Apple Music and Spotify, likes on YouTube, and keep those comments coming. I love answering them. Sometimes you hit me with some challenging questions. Sometimes you hit me with total crap. Nonetheless, I still try to answer them. We'll talk to you soon.